Good morning. Good morning, good morning, good morning. How are you guys this morning? Good morning. Everybody is here today right away. That's awesome. Okay, I am going to get started because so many of you here are here. Say hello though. Say hello, hello, hello. Then it's nice because then I know who's here. Otherwise I can't see it. Oh, there you all are. Good morning, David. Good morning, Stasha with the new job. Good morning, Tracy. Well, look at you guys all up and at it. I love it. Okay, I have not a super ton to cover today, but I have some good stuff. So if you are new, then you don't know who I am, maybe. I am Mary Jo Irmen, the author of the book Farming Without the Bank and Life Without the Bank, these two books, and I teach the infinite banking concept. So today we are just going to go over a little bit about who I met with this week and what that looked like, and hopefully that information can help you. So just kind of in a nutshell, hang in there because we have some pretty awesome stuff this week as far as 18-year-olds that are making money to I've had a couple people with a lot of debt again, and I'm going to share with you some strategies how to get rid of that. And then we'll just go into some Q&As because I had I don't know if I had enough stuff to fill up time today. So if you have questions for me, please type them in as you go. And ask them because we are going to have time today to answer questions. So if you have a question, no question is a dumb question. Here's the thing. If you have the question, other people have that exact same question. So do not think that, oh, well, I don't want to ask it on Facebook. People are going to think I'm dumb. No, they won't, because other people have all the same questions every single day that I talk to people. Good morning, Nathan. Good morning, David. Good morning, Brent. Oh, I love it. You guys are getting the hang of this talking to Mary Jo thing. I like it. Okay, let's get started. So the first person that I talked to this week, and this was really quite exciting for me. Let me get to my notes. This was really quite exciting to me. For me is that I have a client whose son, he wants all of his kids to have policies, and he has policies on all of his kids, but he has a son that was 17 and just turned 18, and his son is working and only goes to school till 11 o'clock every day, and he wanted a policy so he could be putting all this money in there. And I said, well, you can't, at 17, here is the thing with kids' policies. And I've explained this a little bit before, but at 17 and under, we cannot structure the policy to maximize cash value growth. Okay, we just can't, because they're minors, we can't structure it that way. As soon as they turn 18, we can structure it so we can add a little more money to cash value. Well, he was just on the verge of 18, and so they waited. So the day after his 18th birthday, his dad does not mess around. The day after his 18th birthday, he met with me, which was Monday, and it was a super exciting call, right? Because this kid is 18, goes to school till 11 o'clock every day, and then he gets in his pickup, hooks up to a trailer, and hauls cattle or hauls whatever needs to be hauled. Because there is a shortage of drivers, he's making $1,000 a week at 18 years old. Fantastic. Now, there were a couple of things. He is obviously still living at home because he hasn't graduated yet. So he's still living at home, but he is wanting to get out of there, right? He wants to go buy a house. but he doesn't have the money because he just started making $1,000 a week. He doesn't have the money yet for a down payment on the house. So I said, well, I know you want to get out of there. And obviously every 18-year-old does want to get out of there, right? But could you just hang out for just a little bit more? And if you hang out for just a little bit more, you can have enough saved up to do 20% down on the house, because he doesn't have the 20% down. This is not a major thing to some people, but I don't like it. If you do not have 20% down when you buy a home, you have to pay PMI insurance. And he didn't know that. He's 18, right? And of course, his parents probably told him, but he's not going to listen to them like he's going to listen to me because I'm a stranger. And so I said, if you can avoid the PMI insurance, because PMI insurance just goes to the bank. It just pays insurance. It doesn't pay down on the principal of your house. It's just money gone. And you have to have 20% equity in the house. And so if you can he doesn't want a super expensive house, right? So if he can just even save for 6 months, a year, and stay at home and maximize that money, maximize the fact that he doesn't have any payments, he doesn't have a wife, he doesn't have children. Can we maximize how much we're saving now? So when the wife and the kids come and we have all those additional expenses, we've already built a system, right? We've already stuck a whole bunch of money in and we have access to money. And so something that I gave him, some food for thought. I don't ultimately care what he does because it's his decision. He is an adult, right? But sharing that information, because right now you can do, from what I understand and what I've been told by a colleague that has a banker client, this banker client said right now the government is allowing the people to get into a house with 2% down. What happens if the housing market crashes and we go backwards? Right now, people think that that's not going to happen. There's no way that could happen because the housing market is insane. But eventually it's got to bust, right? We can't do this forever. We can't prop up this economy forever. I was just listening to Ron Paul this morning before I got on, and he says too, like, at what point are we going to bust? We have to. It's going to be the biggest bust in American history. And so when we have something like that happen and we have 2% down, then the bank calls a note on us and our house is worth far less than what the equity is in it. And now we owe more. I mean, it's crazy. Why are we doing that? Save the money to get into the house so you have enough down. I do not like PMI because it's money gone. And so, or even if you have to have, if you can have 15% down, at least then you've got that much equity in the house and it's not 2. So the other problem, or the challenge that we have with him, is that he's going to be making like 50 grand a year. Well, he is so young, a little bit of money buys a whole lot of death benefit. His human life value. So the insurance company says at his age, he's worth 30 times his gross income. Right? If we want to even put $20,000 a year into a premium, I can't get enough death benefit on him because it's by so much that it goes over his 30 times gross income. Or it goes over his 30 times gross income. So now we have to look at, how much do you want to put in? Do you want to max that thing out before you have wife and kids? Or what do you want to put life insurance on dad because you'll be taking over the farm and you're going to be doing some farming stuff? What do you want to do there? Because we're not going to be able to get it in. You put it in a savings account and be an honest banker. it seems like a little just like, oh, it's just minor. He's 18, he's starting a policy. 18 with a lot of money, starting a policy, wanting to buy a house. He's got a lot of stuff that and he's obviously a worker. He obviously isn't going to just sit around and do nothing. Um, so he's going to have money. We just have to maximize it. And if we can teach these people at a very young age that they don't need to go to the 401k system, they don't need to go work for somebody, that's going to be absolutely huge. Huge, huge, huge. And we have a lot of really good young people coming up that see the value of that. In my opinion, we have more young people than we do crappy young people who aren't doing anything. And that's all we ever hear about, right? Is, oh, this next generation is so lazy, blah, blah, blah. I'm not seeing those people. I'm not seeing the lazy people. And so I'm excited about the fact that we have so many 18, 20, 25-year-olds that really do understand business. They really do understand that, you know what, I'm not going to stick money in a 401k. I'm not going to just sit back and hope that somebody else takes care of me. So exciting, if you ask me. Okay. Then I had another business owner that they are not farmers at all. I don't think I talked to hardly any farmers this year or this week. Most of them are business owners. So she is a business, her and her husband own a business. They own a landscaping business, and they have a lot of personal debt and they have a lot of business debt, and they just bought another business. And so this is what happens sometimes when you have a call with me, is we tend to not talk so much about infinite banking, but we do a little bit of business coaching. And so when I look at what they're doing, which is a lot of what contractors are doing, and I've really gotten into the contractor space just because we've been doing a remodel on our house and contractors drive me crazy. The way they run their business, I just shake my head. Like, how do you even run a business that way? It blows me away. And I don't know if it's just an industry standard thing, if people just believe that that's how contractors need to do their jobs. But in this case, we have a line of credit that is kind of the issue, right? Because we've got this line of credit that we've had to buy materials with, we've probably had to pay payroll with. And it's because we have a whole bunch of accounts receivable sitting out there, jobs that are 95% done. The other 5%, we can't get the material, or we don't have the time to get back to it to finish it. So in their world, they do not bill until the job is done. Now, I don't know a ton about construction, but I do know that if somebody waits 4 months to bill me, I am most likely going to now question that bill and say, well, what did you even do? Are you trying to screw me? How come this is so much money? Because people tend to forget what you've done. And this has happened on our house with construction, is that they wait to bill you until they are completely done. Why are you waiting until you're completely done? The electrician did not wait until he was completely done. He billed me as soon as they were, completed with what they could and couldn't come back anymore until the siding was on and whatever. The plumber that I have, great guy, haven't got my final bill. It's been months. So, obviously I know what he did, but I still, no final bill. Where's the bill? I want to pay my bills. And so for them, I said, why don't you bill halfway through the job? You bill as you get the work done. You don't wait until the very end, because it's 15, 20%, because we have credit cards. We have a line of credit. So up to 20% have various things. We have a line of credit that we can't get paid back. We have credit cards that we can't pay more than the minimum on because we don't have any of the money. But we've done the work, and you have to pay your guys. So why aren't you billing along the way? That just doesn't even make sense to me. And that seems to be an industry standard with some contractors. Oh, I'm just going to wait until I'm done. Is somebody expecting you to wait till you're done? And I compare it to life insurance. When I first started, people expected me to meet them at their kitchen table. They expected me to drive to their house. They expected me to work nights and weekends because that's what life insurance salesmen do. Well, guess what? It's not what I do. And I'm not trying to sell you anything. I'm trying to teach you something. So if you want to learn, it's Monday through Friday, 8 to 5. Those are my hours because I have a family and I'm going to spend time with my family when my family is home. We have to set some expectations to our clients. And on the business side of things, these guys need to set those expectations. Because it's crazy that they have all this, they should have $100,000 of accounts receivable sitting out there, and they have all this debt that they're paying 20% on. I would be changing the way I do my billing ASAP. And I would make people aware of that the second that they hire me. So they also started another job, or they bought into a business franchise, and they're going to be starting that. And she's excited about that because it's going to have monthly cash flow. And I said, well, that's awesome. And I'm excited for you. And I'm sure that it will be a success because they are like super hard workers. Another business because this business isn't doing well, thinking that the new business is going to supplement the old business. If we run the old business correctly, we'll be just fine, right? The other thing is we had credit card debt at 20%. Why? They had a fairly decent score, not amazing by any stretch of the imagination, but I've had other clients that have had the similar credit score that we took these 20% credit cards and rolled them to a 0% card for 18 months. It's a 3% fee, so it's essentially 3%, right? But you now have the ability to have 18 months to pay that off and no interest accumulating through that 18-month period. Just make sure that you get it paid off by month 17, not month 18, if it's an 18-month free. Because if you don't pay it off by the 18th month, everything, like have that card zeroed out at month 18. Because if you don't, they will retroactively charge you interest on everything. And so you have to be very, very careful if you do that. But if we can do that, we can get this debt paid off a lot sooner, right? And and then change the way we do some business. So that, and then we also talked about with them is I said, why do we have so much stuff? Where'd all this credit card debt come from? What's happening here? Well, both of them are maybe not as diligent as watching their money as they should be. She would not say anything, but I do think that there is a little bit of, well, he doesn't look at the books. And so if he wants something, he goes and buys it. And I am just assuming that because that is what happens with my farmers. The wife does the books and he wants a new tractor, so he just goes out and buys it. And that is not how it works. If we have debt and you are told by the person keeping the books that you cannot buy something because we don't have money to make the payment, then you cannot buy something. And so there is, I think, a little bit of that possibly going on, that they need to have weekly financial meetings and she said that, they've talked about that, but it never happens. It needs to happen. It needs to be put on the schedule. If you are not having the weekly financial meeting, you can go out and you can work as much as you like and make as much money as you like. But the more you work and the more you bring in, the more you think you can spend, because nobody really truly understands what's happening with the numbers. The numbers need to be looked at. And I understand, I call it financial PTSD. I totally understand it. when I didn't have, I still don't like to look at my numbers. It's not something that I love to do. Even though my numbers are always positive, I do not look at them because when I was broke, it made me like almost hyperventilate. Oh my gosh, I don't have any money. What's happening, right? Because when I started my business at Roses, I went through the struggles to do that. Well, now I don't have those struggles. However, I can still like, it's PTSD. It's financial PTSD. I'm going to stick with that. That's what I call it. Okay. Pay attention. Everybody needs to be on the same track as far as what is going on in that realm. Okay. Another business owner that wants to sell her part of the business, and then they are going to be buying some acreage from her dad, and she needs a house. And she too has exactly down what she needs for the loan on the acres that she's going to be buying from dad. And I said, why isn't dad owner financing you? Well, he didn't really love that answer, or he didn't really love that strategy. So I emailed her, or we talked about what happens if dad owner finances you this way with lower interest rate, or what if he charges you less per acre with a higher interest rate? That way he is not having to pay so much in capital gains. And so I don't, you obviously need to talk to your accountant about that strategy to see if that would work at all. I have talked to accountants that have told me several times, yes, that's a great strategy. Instead of whoever is selling you the land, instead of dad in this case paying a whole bunch of money in capital gains, because he wants to sell her the land so he can pay off a note, the only note he has with the bank. So he is going to give up interest, maybe 100%, 50 to 100% more in interest. He's going to give that up, pay capital gains, and then pay the bank off. If you sell your child land and she can make that payment for you, what does it matter? What does it matter? It doesn't matter. Keep your note at the bank. And if, granted, if they call the note, you're going to want the money to pay it off. But if you're making payments and you only have one loan, chances are they're not going to be calling that note. So just getting dad to understand that he should own or finance. The other thing is dad is about 75 years old. And so obviously he will most likely be gone before she has everything paid off. Well, then it just goes to her and her siblings. And if her siblings are okay with it and everybody sits down and understands what's going on, it just goes back to the estate, right? And then at some point, she's going to get a third of that back anyway. And so it really is a win-win for everybody, in my opinion. Just have to convince dad of that. But how much risk is there if we are selling land to our children? Like, it's not like it's a stranger that we've never met before. We know these people. But she is excited to, get started and do some rotational grazing and do some regenerative agriculture stuff, because that is not how dad ranches. And he has no desire to change and implement anything that she's learning. So exciting for them, very exciting for them. And hopefully she can get her business partner to buy her out. And then she will have a lump sum of money and be able to get started and do something and buy some cows and all that good stuff. And then we can put a lump sum in the first year, right? We can add extra money the first year to get everything started. All right. Next guy I had. Good morning, Brett. Good morning, George. Hi, Janine. How are you? The next gentleman that I had was just an employee. He is not a business owner and he is not a farmer, and that is rare for me. It is rare for me to talk to somebody that does not have some little business or something on the side. I talk to a lot of employees, but somebody that is just a straight up employee. These two were an absolute hoot to talk to. It was so fun. But he said 6 months ago that he started reading Robert Kiyosaki stuff. And that led him down the trail of infinite banking. And so for the last 6 months, he has read and watched every video he can on infinite banking. And he is severely disappointed that he has always been told to put money in a 401k. And he is severely disappointed that his coworkers won't listen to him. And he said, they're in the same position I was 6 months ago. They're head in the sand and not paying attention. But he was putting like $19,000 away in his retirement plan. $19,000 a year. And they have like $20,000 of credit card debt. That is a lot of, I see that a lot. It's not like it's abnormal. But if why would we put all of this money to our retirement plan if we have credit card debt at 15% interest? That absolutely does not make sense at all. But that is the mentality of the majority of America. Oh, let's stick all of this money in our retirement plan, and then we don't have any money to go do anything fun. We don't have any money to go buy anything. So then we're going to go use our credit card, and we're going to pay more interest on the credit card than we're ever going to make in that 401k. And so he has a loan on his retirement plan that, for whatever reason, I guess I didn't ask him what that was for. But he has a loan on his retirement plan. He could take another $30,000 out of that as a loan. Their max. However, he can't because he already has a loan. So until that loan is paid back, you can't take more. What? That's the dumbest thing I ever heard. Hey, let's say you can take $50,000, but if you've borrowed 20, you can't take the other 30. Because until it's paid back. So you take it all or you take none, because if you take some, you can't take any more? What the hell? Whose stupid idea is that? That doesn't even make sense to me why that would be implemented. Maybe I have to think about it a little more before I get all worked up about it. But seriously? Because what he has now is a 2.5% loan. Why would you not borrow against that and pay off your credit card? That only makes sense to me, but he can't do that. So instead, he tried to sell his boat to pay off the credit card, but due to where he lives, that didn't happen. And so, again, I told him the same strategy as I told the client I had earlier in the week. Roll that credit card over to a 0% card for 18 months or 24 months. And these two have really good credit because they have worked both of them that have credit card debt work their buns off to get their credit up where they are. So kudos to them. But these two have really good credit scores. So there's no reason that you shouldn't be able to get a really good 18-month, 24-month, 0% card that you can roll that to and get that paid off. And they have also acknowledged the fact that a lot of this debt was from when they were younger and not quite as diligent about watching their money and all that good stuff. And this is something that I have been seeing a lot lately, is that we are in our 40s and we are still paying credit card debt off from our 20s and 30s because we racked up a lot of credit cards. So kudos to you for making sure that gets paid off. But if we can roll those to a 0% card, I don't know what that's going to do to your credit score. I am not going to sit here and tell you that is going to be the end-all answer, but it is a strategy that I have had clients use that it works, right? Because we take a 15, 20, 25% interest rate, roll it to zero with a 3% charge, and then we are aggressive at paying this off. Because what he did is he said, oh my gosh, I didn't know about infinite banking. I did not know anything about my 401k and investment crap. And so this is a joke. I don't get access to use this money. If I want to create cash flow in retirement, which is what his concern is, he said, his big question is, what am I going to have at retirement? I'm like, well, between what you have, where we're going to be at $1 million. Clearly not enough money. You're 40 years old. You're going to need about $3 million. And then I figured what inflation was going to be. $40,000 today is going to be $100,000 in 25 years from now. And so we're going to need 100 grand to live like we're living today on 40. We don't, $1 million is nothing, absolutely nothing. That's if you don't figure taxes and you need 100 grand to live like you live on 40, that's only 10 years. You're 75. Chances are you're not going to be dead. So we're going to need $3+ million, or we are going to need some assets that generate cash flow. We're going to need some rental properties. We're going to need something that's generating cash flow so that we have money coming in and we don't need to worry about what is going on in our life insurance policy, what's going on in our IRA and our Roth and whatever. And so he was maximizing out that retirement. So now he quit. So now we can take that money, get this credit card stuff paid off, put a little bit into a life insurance policy. But once the credit card is paid off and the majority of these bills are paid off, he's going to have $1,700 a month freed up. $1,700 a month. So now, if you're super honest, you're going to start a policy for $1,700 a month in a year from now or 18 months from now when everything is paid off. Because we actually took his credit card debt from 6 years or 5 years payoff from what they're doing right now. We can have it paid off in 9 months with just the strategy that I implemented of saying, hey, let's use some of whatever you have for a 401k. First of all, you're getting a $9,000 tax refund. That's absolutely crazy. Go change your withholdings so that you get more. And you don't want to necessarily have to pay a ton in, but there's a line to ride there. He's going to get a bonus from or he gets money back from his state. So there's a lot of things that they were not necessarily just utilizing correctly. They were doing a lot of stuff correct, but not to the point of getting everything paid off. So we took almost 5 years, and if all works well and we can transfer that debt, we can have it paid off in 8 months. Or 11 months. I'm sorry. Huge. We could even possibly do 6 months, depending on what happens as far as bonuses and those sort of things. So that was exciting because there was light at the end of the tunnel there for them, but nobody has ever taught them to think that way, and he is just flabbergasted. He's like, where has this been? How come we aren't taught this? Why was I doing this all wrong? And he's super frustrated with the whole system, which is people's typical reaction in his situation. That is a very typical reaction. And, he admits, I had my head in the sand. I did what I was supposed to do. When I started my job, they're like, oh, you need your 3-legged stool. That's how you're going to get through retirement. That is such a bunch of crap. How you're going to get through retirement is creating some sort of cash flow. Okay, that was all I had for client meetings this week. So if you guys have questions, please let me know what those questions are, and I am happy to answer those. But I do have a couple things that I wanted to go over that people are asking me a lot. Good morning, Brian. People that are asking me a lot, and it's just a lot of noise out there, I think. But people are saying, oh, will life insurance company pay a death claim if we've died from COVID? I don't understand why they wouldn't pay a death claim due to COVID. My insurance company is paying death claims due to COVID. So I don't see why that would not happen. Now, I do have a client that I talked to in Colorado that one of her clients had a relative that passed to COVID, and the insurance company said that they wouldn't pay it. Now, I have not heard that from any of the companies that I work with, so I don't know what exactly the story is there or why they wouldn't pay it. I have also had a lot of people asking me, well, if I get the jab, is the life insurance company still going to pay a claim if I pass away? Because this is not, I think the rumor is this isn't scientifically proven or FDA approved or whatever it might be. yes, the life insurance company is still going to. In fact, our life insurance companies encourage people to get the vaccine. So, now I'm probably going to be censored. Um, so that is not a true statement either, that I have seen with the companies that I work with. So I wouldn't be super concerned about that at all. Okay. Let me see, Stasha. As far as Sasha's asking if you if the goal is to funnel as much money through the policy, do you have a recommendation on how much cash you should keep readily available? Um, yeah, I don't mind that 3 month of cushion. We can look back at COVID and say, well, holy crap, we needed, 2 years worth of cushion. In some cases, if people's businesses went under and there wasn't a job or whatever might have happened, um, I would tend to agree with the 3 month. You're gonna want you want some money on hand. You should never completely drain yourself, which is why a lot of times, like, I will still go to the bank and borrow money because I'm not going to give up my liquid money. Like, if I go buy a vehicle, you can take my vehicle. If I get into a situation where I don't have a job, well, you can have my vehicle, but I need to still be able to eat and pay for electricity and, whatever. I can go buy a crappier vehicle. I don't need to have what I have. And so for me, it's, I kind of look at it that way. Um, but yeah, 3 months is, I don't know that there's a true answer, Stasha. You look at that and say, well, 3 months used to be a big deal. Now people are without work for 2 years. By choice, probably. Um, but still, if I was a business owner and I didn't have any work and my business went under, now what? I mean, what does that look like? How much debt did I have that I had to pay? Can I get a job? Most likely, yes. But I have met with several people that have lost their jobs due to this whole thing. So I don't, I like to have a lot of money on hand. I don't like to be, I probably have more than 3 months just because I'm super conservative and I always worry about that stuff. Um, and I'm not talking like gold and silver. Obviously, gold and silver are important, but I am talking cash as well. Just because I am not, as much as I love gold and silver, I just don't know that people are going to be saying, hey, Mary Jo, can you shave off a little gold for this bread? I mean, if we get to that point, we're going to be bartering and ammo is going to be a pretty big thing. Well, thank goodness, Bruce. Good morning. I am glad that the fires are almost done because we were bombarded with smoke last week. Good morning, Caleb. Good morning, David. Um, David, they're not FDA approved, correct, but that does not mean that it is a true statement that the insurance companies are not going to pay for a claim on that. But yes, you're correct. They're not FDA approved. You're welcome, Sasha. Okay, the other thing that I thought was interesting is I have a couple of clients that were prospected by another life insurance company, which happens, that's not abnormal. But one of my clients that happened to passed away. And so I was talking to his beneficiaries about this and said, boy, am I glad he did not move his insurance because it would have been new and it probably would have been less death benefit and all that good stuff. But I was telling them that I said I was really disappointed in this other agent that was prospecting because he had been prospecting a couple of my clients in the area and is lying about the fact that his company is mutual and my company's not mutual and just being nasty. And they said, yeah, they don't know how many. There was a joke amongst the family that this client of mine just kept egging him on and making him believe he's going to buy life insurance with him because the guy just kept buying him beer. I'm not going to buy you beer to buy a life insurance policy with me. But it was a good reminder to me that there are still salesmen out there, right? That I'm gonna wine and dine you to get your business. I mean, I don't even know anybody that does business that way anymore. It used to be a thing, but I don't even know anybody that does business like that anymore. And I don't know anybody that falls for that kind of tactic. Because if somebody is whining and dining me, it's not gonna go over well. And I have been known. It's kind of funny in the life insurance world. This is a big thing. Life insurance companies will wine and dine you for you to write insurance with them. And I am very clear from the get-go that if you are going to wine and dine me and kiss my butt, this is not going to be a good working relationship because you should be doing what's right from the get-go. You should be here to service me. You should be here to service my clients, and then I will do business with you. I don't care how many beers you buy. First of all, I don't drink beer, but so that's not going to win me anything. However, it is funny to me that we are still, the reason people do not like life insurance and do not like life insurance agents are because of slimy, sleazy agents that do crap like that. If you cannot sit down with somebody and say, hey, this is what we have for you, and it's better than what you have already, or how about we just be honest and say what you have already is fantastic. Do you want to buy more and supplement it with a different company, right? I tell people all the time, you have really good whole life insurance with a mutual company. It's great. Don't cancel it. Don't get rid of it. Why would you? You have cash value there. I talked to a lady this week. One of the clients I had this week has life insurance, $10,000 of cash value. Never used it. No idea that it was sitting there, right? Until she read the book. And so keep paying that. Make sure you never let that go. It's a good policy with a good company. And it's not an infinite banking policy, but it's a great traditional whole life policy that's already old with lots of cash value in it. Use it. Don't go canceling it. And so I just thought it was very interesting that people are still buying people off and still being sleazy salesmen. Beware. We had cattle in Lewistown. And we have my sister-in-law's family's over there. Okay. If you guys don't have any other questions, then that's all I have for today. I mean, I could go into more frequently asked questions and all that good stuff, but if you have any questions, if you need anything, you know where I'm at. You can message me here. You can email me, maryjo@withoutthebank. I am always answering emails. If you have not gotten any of the books yet, if you have not gotten the Life Without the Bank or Farming Without the Bank or Becoming Your Own Banker, do that. Go to withoutthebank.com or go to farmingwithoutthebank.com and grab your books. If you are not a big reader, then just grab one of these. This book really is meant, the life book really is meant for more of your business owners, employees, goes over 401k stuff, a little bit more market stuff. And why you should not pay cash for your kids' college. However, I have had people that have read Farming Without the Bank as well and said, man, I really liked Life. So if you want to read them both, great, but you only really need to start with one. And you can start with whatever is there for you. This book is meant for non-farmers because it does not have farm analogies and it has much smaller premiums and much smaller numbers in there. So if you want something that is probably a little bit, makes a little bit more sense to you, you can grab that book as well. But they're both on both of my websites. You can get them there. Otherwise, you just let me know if you have any questions or anything. Oh, here's David. Hold on. Nobody has ever asked me that, David. I do have a private Facebook page for clients only to talk about infinite banking. And it's funny because nobody talks in there because they're farmers and they don't sit on Facebook. And we try to keep it active, but I do have a private group for that, but I do not have a private group for non-clients. But I do for clients. Thanks, Bruce. You have a great day as well. All right. If you need anything else, you just let me know, and I am happy to answer those questions. Otherwise, you have a fantastic weekend, and we'll see you next Friday.